Hello and welcome to my channel. So this video is the second part of a two-part series. The series is all based on the upcoming Limepay IPO. Limepay is a buy now pay later company that's actually planning to list on the Australian Stock Exchange. And in the first part of the video, I covered how you can subscribe for the IPO through ComSec specifically. I also discussed what the Limepay business model was all about, how it's different from Afterpay, ZipPay, etc. In this part of the video, I'll be talking about the 5 essential things that you should actually be looking out for before you invest in an IPO. And this doesn't apply to just Limepay; it actually applies to all different companies that are actually listed newly, um, IPO in general. So first and foremost, it's very important for us to understand that um, initial public offerings, buying into initial public offerings actually carries a lot more risk. So companies that have been listed that have a longer track record of being listed are actually a safer investment in the sense that you can actually see their previous record, you can see their revenue, you can see a lot of their reportings. But whereas with IPO, a lot of these private companies that are coming to becoming publicly listed for the first time, it's very important for us to sort of look at their previous reportings, which is usually quite difficult because there's no regulation mandating private companies to sort of publish their reporting. So it's very difficult to sort of understand what their financial positions so that's one factor. It does carry a lot more risk, and it's very important to understand those risks before you invest. So, the second factor to sort of consider is that is the shares that's been offered, is it well priced? Because a lot of the time the companies just they sort of come down to a certain price based on what they judge that the value of their company is. So their judgment might not always be right, and this judgment is always based on also it's very closely associated with what you call the book build. So the book build is after people have sort of subscribed for the IPO, they did do a kind of summary of all the subscription they had, and they kind of um, uh, determine what their value is from there. And a lot of their value is just driven by the sentiment, sentiment of the management, sentiment of the people trying to buy their shares or investors in the company. So it's a lot more sentimental. It's not very objective, and you have to do your own research in that sense. So if I was to invest in any IPO for that matter, I want to see, if I'm actually getting good value for my investment. Because we've seen on many occasions that, these companies, they finally get listed and the price just starts to crash, almost immediately. And that's you lose out on your investment if that happens. So that's the second thing, make sure that the offer is right, make sure that the shares are well priced. The third thing is, what does the company's balance sheet look like? So definitely there is the obligation to publish some of their accounting details and reportings inside their prospectus, so that this is where you should keep a close eye on the prospectus from companies that are being listed. So with the Limepay IPO that is upcoming, we don't know the date yet, but they are actually in the pre-IPO phase. A lot of activities, so it's very important to seek out their prospectus before you invest, and definitely keep a very close eyes on what the current balance sheet look like. So there will be a lot of forecasts, and there will be a lot of description of their business model. I'll just pick that apart and really zone in on focusing on what their balance sheet, what their previous finances looks like. The fourth thing that I would be keeping a very close eyes on if I was to invest in IPOs is the long-term growth prospect. So what does the company, what are they offering, that gives them the potential to sort of grow within that industry? What's their differentiator? What's gonna make Limepay grow faster than what we've already seen with other buy now pay later shares. For example, ZipPay, for example, Afterpay, and all the rest, IOU Pay. What's the difference? What's Limepay bringing to the table? What's going to differentiate them? So that's very important to understand. And also, what are the sort of customers that they have currently? And how is that going to help them? To grow as as quicker or as quick as possible. That's one factor. Another factor is the last factor that I will be keeping a very close eye on is the broader growth prospect of this sector. The buy now pay later subsector of the fintech industry. What's the potential? I would be looking at the competition within that space as well. We already have Afterpay that's sort of exploring great brand boundaries. We no one expected that the share price will be sitting at around 150, even before turning profit. So is this sector, is it just really hyped? Is it overpriced? Or is there a bubble going on in this sector? So I really want to understand that. This will be based on individual judgment, and this is where you have to look at the chart. This is where you have to look at you have to really sit down and look at the fundamentals. So the fundamentals, the charts, they play a very important role in all of this. And then in terms of the growth prospect, how does that growth prospect apply to this particular company? So what's likely share of the buy now pay later sector that Limepay will sort of enjoy down the road? So these are some of the factors to consider and to avoid that can help you to avoid losing money. And then it's also very good to look at the timing. There's a lot of excitement out there about the buy now pay later industry, and it's very important to sort of understand that some of these shares will likely be oversubscribed, and I'm kind of I have a feeling that the price might actually go up because there will be a lot of interest, there will be a lot of excitement around this. If they list around this period, um, in the next couple of months, it's very likely their price will probably shoot up, even after listing. So you might also want to consider, even buying, after you've seen some of the initial trends. You might not want to jump in at the IPO stage. You might just want to jump in, you know, at the later stage, probably shortly after their listing. So it all depends on you. And then again, this is not a financial advice. It's just education. At the end of the day, you have to do your own research. You have to be convinced that you're making the right investment decision. Thank you very much for watching my video, and please continue to support me by subscribing or liking my videos, so putting your comment down below. Thank you very much.